All right, guys, welcome to the video. Anthony Speciale here with Hawkeye Traders. Super excited to bring this presentation to you. I'm going to keep it short and sweet because we're going to get right down to the point. The right down to the point is volume will precede price action if you understand how to read it. All right? Will it do it every time the way you want it to? Nothing works that way in the market. But if you have an understanding of volume and price action, you can put such an edge in your favor, something you could only dream about. So let's talk about it. I identified this live in front of folks who were trading with live money. So I want you to know this is not hindsight. This happened live, again, in front of folks who are trading live money. Why does that matter, right? Because anybody can look back at some chart and go, oh yeah, this looks pretty good. No. I identified it live in front of folks who are trading live money. Now, what they did with the information I provided them is totally up to them. But it doesn't discount the fact that it was identified in real time because I understand the relationship between volume and price action. So I want you to look very specifically here at the 8:54 a.m. Eastern Standard Time candle on light sweet crude oil. This is a 3-minute chart, meaning each candle or rotation is the data that accrued from the market being open for a period of 3 minutes. So notice we have this little kind of doji style reversal candle here, right? Tiny little body, big wick over it. And at the time, and I'm going to take some of the other volume away, and it'll be more apparent, you could see that was pretty high buying volume, all right? Of course, once the session opened, the volume itself had changed, but in that moment, we had recently pushed slightly above a prior high with increased buying volume that sent us sideways for about 40 minutes. We squeak above, we get a high volume radar dot on that volume below, and guess what, guys? We absolutely tank out of it, not just once. We return to it on the inventory report and again tank right out of it. Now notice on the inventory report, ultra high buying volume into an area we've identified as supply already or resistance, and you can see that. Boom, immediately we turn around. We impulse into these lows, we correct, place a lower high, also which I identified live, and then the market continued to follow through. So while the market's ticking in front of live folks, I dissected all of this so that they can, if they choose to, implement their trade plan with the analysis provided. And the simplicity is the volume basically led the way. The volume led the way here, that we were having a hard time going higher. Then when we pushed up here on high buying volume, we didn't go anywhere. We stopped. And I said, I dropped an arrow on the chart. I go, this could be the high. Maybe not for the session, but it could be the high for the near term. And it was. We pushed back down, pushed back up, pushed back down. You can see super high selling volume right here, right? And then we were unsuccessful in closing below this candle. We retested it, pushed back up, came back down, retested this wick a whole bunch of times, right? What was once support was broken, retested, pushed through, is now resistance. And you can see, now we're trying to push through it again. It was a relatively choppy session. But choppy is okay if the volume tells you what price action is likely to do next. The volume told me on high buying volume with no follow through in that candle that price is likely to fall. And that's exactly what happened. Right here, high selling volume told me that we're going to have a hard time getting below the low of this candle or the wick specifically, okay? Right? That this wick was going to provide support, lower high. We break it, and now we've broken it again. We could pull right back into this, find support, and then drive us into this area up here. But the price action is only able to be analyzed because the volume gave us a reason to create a thesis around what is transpiring in the market. Guys, it takes a few things to understand the market. Volume, number one. Price action, number two. Market context, number three. Okay? You have to be able to put those puzzle pieces together before you add anything else to your trade plan or any other indicators to your screen. Because as you can see, aside from my drawings, it's just volume and price action. That's it. Because of the volume and price action, I can now create the market context. I understand that there's supplier resistance here. I understand that there is support here until proven otherwise. And I identified all of this, guys, live, right? And I do that for a reason. Because anybody can look back and go, oh, yeah, this happened. Oh, that happened. This happened. Okay, great. But if you can't go back and say, hey, you know what? I understand why this happened because I identified it in real time. And listen, it doesn't mean you're going to be right every time, but it does mean that you at least were able to interpret what the probability was of what would happen next. And you have to do that in a live market. You can't just go back and go, oh yeah, I can recognize it. No. You have to invest the time in a live market. Before the price action prints, the next candle, you can go, okay, I have high buying volume, a very small candle, body's at the bottom. Potential reversal right here, okay? Got super high selling volume, but the body closes above the 50% mark of the entire candle with the wick. That's probably going to cause price to push back higher. I get ultra high buying volume back into the prior high, which we failed at. And we have zero follow through, and the bar probably closes somewhere in the 60 percentile. Guys, it makes all the difference. Many of you are running super cluttered charts. Okay, and if there is stuff on your chart that is meaningful, that's fine. Listen, I run a reference chart as well. Okay, I run a reference chart on 3 minutes, and then I run another chart that's clean, like you see here, on 5 minutes. So I'm looking at 2 time frames intraday because the volume and the price action is going to print a little bit differently, and having the insight to both of them really procures not missing any opportunities because I'm looking at it from the same thing from multiple angles. Right? I have my higher time frame analysis. I know what the big picture is doing. Now I'm looking at my 3-minute reference chart, my 5-minute naked chart, and I'm putting together the market context around what's transpiring, when, where, and why. How is it easy for me to do it? Well, a couple reasons. A, the Hawkeye indicators print the volume very specifically to who's in control and which candle. We also provide the wide bar, which tells me, hey, compared to the prior 14 bars, the percentage of this bar is X greater than that. That's pretty meaningful. Now I need to look at the size of the candle, the shape of the candle, where the candle is in comparison to what the volume's doing. Tiny little candle, high of the session, tiny little body, wick on top, ultra high buying volume, no follow through. This should roll over, and that's exactly what happened. All right, same thing here. Strong candle, close probably, like I said, in the 60 percentile into supply or proven already resistance. What's going to happen? Market's going to sell off. Same thing here. We push lower into prior price action, okay, from the overnight. Ultra high selling volume. We close above the 50% mark. What's going to happen? Price is going to push back up. Okay? I don't need anything else on the screen to be able to identify, interpret, and provide expectations for what's going to happen next based on just what the volume and price action is telling me. And that's what I want you to have the ability to do. So I'm not just going to put the Hawkeye indicators in your hands. I'm going to also give you access to our Hawkeye price action and volume mastery classes. Okay? You can take them on your own time. It's an entire library filled with content about volume and price action, the interaction between the two of them, and how you can apply it to real life scenarios. Okay? Whether you're day trading, swing trading, position trading, okay, it doesn't matter. Volume and price action interact equally the same on all time frames. right? That's why it's so important to understand what works broadly in the market. You can use stocks, futures, forex, cryptocurrencies. Doesn't matter what you're trading, right? They all operate on volume and price action. So I encourage you to do yourself a favor. Below this video, there's a link. I want you to click on it. I want you to consume the content. I want you to feel free to reach out to myself or my Hawkeye Concierge team. I want to answer your questions for you so that we can help you decide if you're genuinely serious about trading to take the next step forward into the volume and price action world. Because without that, guys, nothing else matters. Trust me. There is no indicator or piece of software out there that matters if you do not understand volume and price action. So you are the variable, right? And we want to help you become the dominant trader. So let us, by simply going below this video, clicking the link, giving us a call, sending us an email, let us answer your questions, and helping you get started on the path to consistency, discipline, and profitability. All right? I hope you enjoyed this video. If you did, make sure you leave a like. If you'd like to leave a comment, I will respond to it personally. If you haven't subscribed to the channel yet, please do so. And again, those links are down below. I'll see you in the next video, guys. God bless and have a wonderful day.